Apple's revenue warning has investors taking a closer look at other tech companies that could be hurt by the coronavirus outbreak. Joining us now, venture capital investor who says Sonos may have avoided the worst of the virus impact thanks to the trade war. Mike Volpi, general partner at Index Ventures, joins us. Mike, first of all, let's just hit the Apple news this morning. To what extent were you surprised of this guidance cut, given that the January forecast for Q1 revenue was meant to factor in coronavirus?
Yeah, not entirely surprising. If you look at what's happening in China right now, there's over 150 million people that have some kind of a restriction, can't leave their home, can't travel. That's over 10% of the population. And Apple faces a bit of a double whammy in that when people can't travel, leave their homes, they can't buy phones, they can't buy iPads and so forth. And at the same time, all of their production is in China. So you get hit on the supply side and on the demand side. So in some sense, not totally surprising. And frankly, when they did their earnings call, they sort of gave a very wide band because I'm sure they didn't exactly know the effect it would have, but no surprise there, really.
Share price down 3 or so % in the pre-market. Does it surprise you it's not more than that?
You know, probably the truth is that people don't really know the deep impact of what the coronavirus is going to do. You know, we try to, even in the technology business, we try to keep up with what geneticists and other people are saying about it. It's not really super well understood yet, and therefore the stock market doesn't understand the impact on companies like Apple.
But is the key point versus, say, their downgrade to guidance a year ago, which clearly had a much bigger, albeit temporary, impact on the share price, is the key difference that people think this will still be something that's only short or medium term, and ultimately we'll see a bounce back in the long term?
Yeah, I think if you look at most of the research that's being done on the virus, it indicates that it peaks sometime between now and the summer, that it doesn't go on beyond the summer. And therefore, I think the stock market is responding to a 1 quarter or two effect as opposed to a long-lasting effect.
In terms of the component manufacturers, other China supply chain, Apple supply chain linked companies, which ones are you focused on that could be hit?
There's so many. If you look at a consumer electronics company like the Sonos that you mentioned, it has an enormous supply chain, everything from resistors to CPUs to memory, all sorts of components. So it's really hard to tell where the disruptions are because the issue is if people can't get to a factory, it could almost hit anything, and it depends where the factory is and whether there's a lockdown there. So really, it's looking at the entire supply chain and seeing what effects that has on production.
And Sonos, you think, is better protected?
Somewhat. I mean, Sonos has the advantage of not selling a lot of products in China, which means, I don't know if it's an advantage, but at least for now, their demand isn't impacted. And the tariffs had created this effect where a number of companies that were tariff affected were moving to other geographies. In Sonos' case, they were beginning to do a significant portion of their manufacturing in Malaysia. And so that dampens the effect. But like I said earlier, it is a supply chain issue. So while you do the final assembly in Malaysia, and that should be okay, all the component flow ultimately still coming from China. So for now, looks okay, but not totally sure yet. And the effects here may widen.
More broadly, how do you think about the enormous run that Apple's had? I think it was up 120% since its last profit guidance warning to today.
Look, it's an amazing company. Every time you think Apple's reached its peak and it can't do anything anymore, it does it again. So, just one of the gems of our industrial system, I would say.